Welcome back, students who are taking financial accounting, and we are working on the Chapter 2 exercises, Group B. And we left off in the last video with problem 27, so let's pick up with number 28. Okay, it says here, the transactions for Ginkgo Inc. for the month of June 2014 have been posted to the accounts as follows. So these are our ledger accounts in the T account format, and they've been posted. So it says prepare the journal entries that served as the sources for the 6 transactions. Then 2, calculate the ending balance in the accounts. Prepare the trial balance at June 30th, 2014, and then prepare a balance sheet as of 2014. Okay, so notice here, if you had seen the videos for exercise 2-27B, okay, basically we were given the transactions and then we were given beginning balances in the ledger accounts, so we had to create our journal entries, and then we posted them to the ledger accounts before we created a balance and then created a trial balance. So the difference between that exercise and this exercise is we're actually going in the opposite direction. All of the entries have been posted, but now we need to figure out what those journal entries were. And then once we have that, we're going to create a balance. We're going to create the trial balance, but in addition to that, we need to create the balance sheet. So that's the difference between 27 and 28 here. We have to work backwards. Okay, so let's see here. Prepare the journal entries. All right, so I'm going to be looking for number 1, okay, and I can see that I have a debit to cash for 28,000 and a credit to common stock for 28,000. And so that's probably the purchase. You know, if I had a description, I would put in, you know, sold stock or, purchase stock for an investment in the business. But that's the journal entry for number 1. I don't need those journal entries, so I can just erase them here. I look for number 2. I have a debit. Remember, debits come first, then credits. So I have a debit to supplies for 1,100, and I'm going to look for my credit, which I'm looking for number 2, and right there it is, an accounts payable for 1,100. So I'm purchasing supplies on account, okay, with that transaction. Excuse me. Number 3 here, have debit to building for 50,000. So most likely I'm buying a building. And how am I paying for it? Well, number 3, I have a credit to a notes payable for 50,000. So I'm actually taking out a note on that in order to purchase it. I'm not purchasing that building with cash. Right, number 4 is a credit to cash. Oops, credit to cash. Let me do this right. Okay, so I have a credit to cash for 4,000, which means I'm buying something. And what am I buying? Oh, I have a debit to equipment for 4,000. Okay, so that's not journal entry. Number 5, I have a credit to cash again for 2,500. And what am I buying here? I have a notes payable, so I have a debit to notes payable, okay, for 2,500, which means I'm paying down on my notes payable. I mean, I took out a notes payable for $50,000 to buy a building. So now I'm making a payment against that note. Okay. So that reduces the balance in my notes payable. And then for entry number 6, I have a credit to cash for $500. And I'm doing the same thing here, except I'm paying down my accounts payable for $500. Okay, so when you're looking at this, and that's why I suggest you do cash, ask yourself the question, am I affecting cash first? Because you have to remember that the normal balance of an accounts payable, well, accounts payable is a liability. So the normal balance of an accounts payable is what increases a liability, and that increases on the credit side for liability. So we increased our accounts payable when we, with the $1,100 that we bought with, for supplies, but now we're actually paying down. So we're paying down that accounts payable by $500. So that means that would be a debit, right, to accounts payable. All right, so those are the journal entries. So we prepared the journal entries. That would be the source of the transaction. So we did number 1 here. Okay. Now we have to calculate the ending balance in each account. So all we're doing is we're adding up the debits, adding up the credits, subtract one from the other. Okay. So I have 28,000 for cash. I have a debit of 28,000, and for the credit side, I have 12,000. So I have a debit balance of 16,000 for cash. For supplies, I have a debit balance of 1,100. For equipment, a debit balance of 9,000. For building, a debit balance of 50,000 because there's only one entry in there. Now for my accounts payable, the difference between my debits and credits here is $600, and since my credits are greater, it's a credit balance for accounts payable of 600. And the same thing with notes payable. 50,000 less 2,500 is 47,500 on the credit side, and common stock is 28,000. Now notice all I have here are, across the top here, I have asset accounts. Then I have 2 liability accounts, and then I have 1 equity account. Okay, just notice that. So number 2 is done. I calculated the balances in the account. So now it's telling me to prepare a balance sheet for Ginkgo, right? Ginkgo Inc. at June 30th. So on the next slide here, Ginkgo Inc. and then trial balance. Of course, I'm abbreviating, and this was for June 30th, 2014. And so my accounts, and I have debits and I have credits. And so I had cash, I had supplies, I had equipment, I had a building, and I had an accounts payable. I'm abbreviating here. Notes payable, I'm abbreviating here. I would normally write those out. And then I have common stock, and I would have a total, right? Because why? I'm going to total these up. And of course, when I do the mathematical calculation, that's what the underline represents. I have a total, and I double underline because it'll be the end of the calculation, and it will be in dollars. Okay. So what was my balance in the cash account? I have 16,000, 1,100, 9,000, 50,000. So for cash, I put a $sign because it's the first number in the first amount in that column. So that's 16,000. And then I had 1,100 for supplies, 9,000 for equipment, and 50,000 for the building. For the accounts payable, I've got 600, notes payable 47.5, and then 28,000 for common stock. Well, the balance in the accounts payable account was in the credit column, so I put my $sign there because it's the first number, and that's 600. And I had 47,500 for the notes payable, and for the common stock of 28,000. Okay, and then of course I add them all up, and when I do, I have 76,100, and when I add up my credits, I get 76,100. And since they equal, excuse me, since my balance is equal, that means I haven't made a mistake anywhere. Okay, if they didn't equal, then I would have to go back and find my mistake. Right, so we prepared a trial balance, and now it says prepare a balance sheet as of June 30th. Okay, so what we're doing is we're taking this information, which is our trial balance, and these are ledger accounts with the balances in those accounts, and we use that information in order to create our financial statements. Well, with this information, we don't have any revenues or expenses, so we don't have an income statement. And because we don't have an income statement, we don't have a retained earnings account, so we don't need a statement of retained earnings. And all we're left with is creating a balance sheet. Now, that trial balance is inadequate, but it's only for, that's not common. You're going to have revenue accounts, retained earnings account, revenue accounts, expense accounts, but they're only supplying you with enough information in order to be able to do what's being asked, which is to create the balance sheet, right? So I would write out the word balance sheet, and the date was June 30th, 2014, and I could just write the date like that, or I can write as of June 30th, 2014. That's the way I like to do it, because it connotates that that it's for that date. And when you just look at the date, you might wonder, oh, well, that was just the date that it was created. Well, yeah, it's the date it's created, but it means these are the balances in the account, in those general ledger accounts as of that specific date. Okay. So the next thing is we put in our category headings: assets, liabilities, stockholders equity, and I'm abbreviating here. And this here is going to be in the single step format. If you don't know what single step is, go back and watch the theory videos because it's explained there. Since we don't have any complicated mathematical calculations, we can just do the math in one column here. So we list our assets, which are cash, supplies, equipment, building, and of course the first number gets the $sign, and that's 16,000 for our cash. Our supplies were 1,100, our equipment was 9,000, and our building was 50,000. And since we're going to add those up, we use the underline, and then we give a description, which is our total assets, and that should come out to a $sign, 76,100, and a double underline showing that that's the end of the calculation. Now for our liabilities, we had an accounts payable, and I'm abbreviating, and a notes payable, and I'm abbreviating that. Okay, so I put a $sign, and that was because it's the first number, 600 for accounts payable, and 47,500 for the note payable. So my description here becomes total liabilities. All right, and that comes out to 48,100. Okay, Now, for stockholders' equity, we only have one account, common stock. Okay, and that amount was for 28,000. Okay, and this is why I could use single step here, because I only have one account here, one account for the stockholders' equity. Okay, I don't have to do another mathematical calculation. If I had retained earnings, then what I would want to do is I want to create a second column, a column to the left, and I would have put my 600 here and my 47.5 here, and then wrote the amount did the mathematical calculation and wrote the total in the right hand column. And then of course for my stockholders equity, I would have my 28,000 here, and whatever amount this is for my retained earnings, I draw a line and write the total amount here. And by doing it that way, okay, I'm going to erase this a little bit. This would then, I'd have a total stockholders equity here, and this would allow me to be able to look and see total liabilities plus total stockholders equity, which would then give me my total liabilities and stockholders equity. But notice what I'm doing here is I'm doing multi-step, meaning I'm doing two steps. I'm moving one column to the left in order to do the math, in order to arrive at the numbers. But because I only have one account for stockholders equity, right? I could do the math like this for the liabilities, okay? And then I would put my $28,000 here, okay? And I can draw the underline, and then I'd have my total liabilities and stockholders equity, which will be the $76,100. Okay, so but you see the idea here. I can see that my total liability number is here, and I only have one number for equity, so I can keep those in the same column because I'm just adding those two numbers to do the mathematical calculation, right? I could have done multi-step like that, but I could have just as easily, which is what the author did. He wrote the 47.5 here, drew the underline, which tells me I have mathematical calculations so that I know, excuse me, my total liabilities are 48,100. And then I'm going to add 48,100 to the 28,000 to get to my 76, keeping it in a single step format, right? So that's the solution for creating the balance sheet, as of June 30th, 2014, in a single step format. Okay, and that's the solution to that particular problem. Okay, all right, let me jump down and take a look at 29 here. Okay, so yeah, there's a lot more work to 29 and 30. So I'm going to break here, and we'll pick up with number 29 in the next video. And as always, if you didn't understand something, go back and watch the theory videos again. And if you still don't understand, feel free to contact an instructor. All right, see you for 29 in the next video.